I'm Greg Hunter. Welcome to USAWatchdog.com. Our next guest predicted back in May that he felt through his gut feeling and also his analysis that September would be a really rough month. He said people would just, get to the point where they've had enough. And so things would start really getting bad in September. Lo and behold, I guess actually it's a little late, started in August. And he also talked about the real problem with what's going on around the world is the debt, and the debt bomb is going to explode. He wrote a book about that and included that topic and many others along with his co-author. We're talking about David Morgan. David Morgan, thank you for joining us today on USAWatchdog.com.
Greg, thanks for having me back.
Of course, your website, silver-investor.com, is your website. Glad to have you on. Yeah, and this is your recent book that you have out here in 2015. Good to have you on. I want to have you on to talk about silver, of course. I mean, you have silver in the 14s. What's going on with the silver market with silver low prices and demand super high?
Well, Greg, I did a survey of many of the top wholesalers and retailers in the country and came to a conclusion that the retail side of the market is basically seized up. I mean, you've got the U.S., one of the biggest mints, backlogged about 4 million ounces of product. You've got two other main mints, government mints, that are basically on halt and not producing or trying to catch up. You have huge premiums in the silver bar market and extremely high premiums in the silver bag market, or what is referred to in the industry as junk silver. In fact, we drill down that a little bit. At the wholesale level, dealer-to-dealer wholesalers are paying almost $5 per ounce above spot price to source silver bags. And what that equates to in the cost of silver per ounce is about $19.25. And as you just said a moment ago, we're in the 14s. So obviously there is a huge demand that cannot be met with current supply in the retail market. Having said all of that, we do have to look at the biggest source, which is the commercial bar market, and what's happening there. Right now there's some inklings of category changes, meaning people that own silver in commercial bar form are moving it from the registered category where the dealers can sell it into the eligible category where they cannot. And we're seeing some movement out of the COMEX into, I would say, stronger hands. So demand continues at these low prices. Silver investors are very smart. They're buying up all available supply here at the bottom. And again, the demand exceeds the supply on the retail side.
So what do silver investors see coming? Some people on the internet saying, silver's going to be $2 an ounce or whatever, which is crazy. What do silver investors see coming that other people may not be seeing coming? Because there's silver investors buying. This isn't just like people buying a couple of coins. I mean, this is huge investment demand, like commercial investment demand, like big investment houses investment demand. It can only be big demand by big players. What do they see coming?
Well, it's hard to speak for others, but I will answer the question. I mean, I think number one, I think silver investors and gold investors are probably the most savvy out there as far as taking the big picture. I watch almost all of your shows, Greg, and I forget who it was, but you said to be a gold analyst. I think it was prior to the Jim Sinclair interview. You kind of preface it with, to be a gold analyst, you've got to look at everything. You've got to look at the bond market. You've got to look at the stock market. You've got to look at the foreign exchange market. You have to look at geopolitics. You've got to look internationally. You have to look, So really, and I agree with everything you said, because to really drill down into precious metals and why, you have to see the whole picture, and you have to see it fairly accurately and fairly clearly. So what does it mean to me? What it means to me is that there's an anticipation of perhaps the September timeframe or beyond the September timeframe that you need to have some sort of portable wealth that's outside the banking system. That's number one. Greg, I'd like to add on to that. I don't try to rant and rave. I try to stay grounded. I've been complimented in the past. You're one of the more grounded guys in the silver space, and I appreciate that because I want to be. I don't want to sell the fear card. I don't want to overamp something, and I don't want to underplay it. I want to be as accurate as I can, and I am biased about precious metals. So let's get that on the table. I checked with a friend that I will be speaking in Montana in about a few weeks, and he does a lot of survival food, okay? Well, with what you just said about the silver demand being so high, he told me that the demand for storable food is going through the roof. He cannot keep up with it. It's like as if somebody turned on the switch a couple weeks ago and the demand has just gone ballistic. Now, again, I don't want to play the fear card. All I'm saying is I think that's something that I'd like to reiterate. And it was on another program, and they asked me again about the September time frame. And what I said is, look, I'm old enough to know there's such a thing as a self-fulfilling prophecy, which means that if there's enough people out there that are concerned about, the stock market cycle, the Shemitah, there's all kinds of things out there on the internet about the September time frame, the Pope coming to speak before Congress, and, there's probably 12 others I left out. So what happens is all those subgroups or that group at large starts to anticipate something. And they start to buy more silver, they start to buy more storable food, they start to withdraw cash from their bank accounts, whatever the case may be. And all of a sudden, that sort of action spills over to other people. So it becomes a self-fulfilling prophecy. So is that where we're at? I don't know. Am I speaking for others? Perhaps. I don't mean to. What I want to do is be accurate. And this is the fact. This is what's happening. So September is going to be interesting regardless if anything happens or not, only because there's such demand for, let's say, worst case scenario type of situations.
Well, you said that, that your analysis and your gut feeling is lined up, and I don't know if you could call it self-fulfilling, but we still have a debt bomb. That's not a self-fulfilling prophecy. I mean, that is a huge overhang. And, the world is looking at the United States and the U.S. dollar and all the geopolitical situations going on. And I'm not so sure that the days for the reserve currency, or at least not having a competing currency, are far away for the U.S. dollar. I mean, isn't that this what the stock market gyrations are telling us? These big, huge, at one point a couple of weeks ago, we had 1,000 points down, at the market open. And we've had up 300, down 300, down 500, up a few hundred. I mean, this is absolutely a jigsaw pattern. What do you think about that?
Absolutely, Greg. Well, I'd have to think. It's clearly in the charts, and that is it's called an indecision pattern. And indecision patterns with high volatility mean one thing: uncertainty. Where do I go? It's like a chicken with its head cut off as a metaphor. People are running around. This is safe. No, that's safe. I better get out. No, I better get in. Oh, I don't know what. And this is exactly what's taking place in the markets. So that's what it means. It's clearly a fact. It's not a opinion. That is what is happening in the markets on a global basis.
But also, too, about the debt bomb. I mean, isn't the debt bomb bigger than it was? I mean, isn't this the key issue, that everybody is facing, is that, the IMF is concerned that they can't do anything the next time we have a problem. They have monetized debt. The Chinese are selling our bonds. I mean, that's all part of the debt bomb scenario that you talk about in Silver Manifesto, isn't it?
Absolutely it is, Greg. If we go back a few shows, I think it was one of yours, probably a year ago, I said that by May, and I'm wrong. Now we're in September. But I said that the fracking oil situation, debt-wise, was greater than the subprime mortgage situation in 2008. And lo and behold, that's correct. Now, it hasn't really manifested in the financial markets that heavily yet, but it's there. It's that elephant in the room, as an overused metaphor. So there's great debt that can't be serviced in the oil sector on the fracking side and others. I mean, even conventional oil. Sure, we've gone from 38 up to about 45 recently, but there's all kinds of debt in the oil sector from top to bottom that cannot be serviced. So that's a subset of the overall debt bomb. And then you've got China saying, we want out $100 billion. Let's get rid of it. Let's move into something else. And they devalued. So when they sell those treasuries, what happens? Well, since they're devalued by 5%, the money they get back in yuan actually has a 5% greater value than it had before they devalued. So there's a lot going on. I would say the currency wars are in full force. The debt bomb is the biggest problem. And you asked me, David, would you please take some time and look at how bad will it get? And I think that's a great question, and I did some thinking about that to be of maximum service to your viewers, because again, I want to be as straightforward and upfront about the situation as I possibly can and leave as little to opinion as possible, although obviously I'm very opinionated and I'm willing to express it.
Well, and how bad will it get? How bad is this going to get in terms of when the wheels start falling off? And it's not just like one and done September, because, market crashes happen. Gregory Manarino, who I have on, he sent me a chart, said, look what happened in 2008 to 2009. This happened over, 6 months' time. And so market crashes, take some time. So how bad do you think this will get financially? Not just the stock market, it's the bond market. I mean, to your point, debt bond, the bond market is the debt market, all the bonds, all these sovereign bonds, all these corporate bonds, the debt market dwarfs the global stock markets by orders of magnitude. So how bad could this get if people just can't make the payments?
Greg, first thing I did was I thought, how could I answer this question, again, as factually as possible? And the answer is that there is a documentary film, and it's called Chapter 5 Argentina. And this is something I've talked about once or twice before, and actually PBS that made the documentary took it off the internet. I found it again. It was put on YouTube at the end of 2014, and so I have that available. So in order to watch that video, and of course this video that we're doing may be sufficient for most people, but if you want to see what actually happened in a financial crisis in 2001 in Argentina, all you need to do is get on our free email list, which is go to the site, silver-investor.com, scroll down to the bottom, give us a name and an email, and for the next 4 weeks on our free email list, we will give you the link that we have that will give you this 1-hour documentary on the Argentine debt crisis. But the video is a very important video of the failing of the Argentine banking system starting November 2001. People lost their bank savings. People lined up in the street, and at noon, in unison, they would grab pots and pans and things like spoons and go to the banks at lunchtime and in unison pound on the banks in protest. People took to the streets. 40% of the middle class became below the poverty line. Early in this video, this documentary, there was a woman that had $180,000 in savings, but yet the banks were not closed technically. You could go to the bank, but you could only withdraw a given amount on a weekly basis. Sound familiar? Just like what's happened in Greece, right? Exactly, or nearly exactly. She could not access her savings, and it was a family savings. It was her mother, her brothers and sisters, etc. Many people unemployed. People taking to the street that saying that they were victims of the IMF. They were across the board. They were angry at all the banking systems. It didn't matter, if they're at HSBC or Citibank or whatever. They were all closed out and could only access a very finite amount of cash on a daily or weekly basis. Some of the subtleties were that you could go to an ATM and put in your card and try to withdraw cash at 3 p.m. in the afternoon and receive nothing. But you could go back at, say, 7 p.m. and all of a sudden you could get the minimum amount out. I think one of the more important points of the movie was that the economic minister of Argentina was asked what he thought about the entire situation. And his answer, Greg, I thought was accurate from what I saw in the movie. And he said it was interesting that under those dire circumstances that the people stayed so calm and not overreacting. Now, when you see the movie, you're going to see a lot of people in the street. You're going to see them throwing rocks. You're going to see them, lashing out. So I don't want to, sway this one way or the other. But relative to the dire straits that these people were in, it was relatively calm. And so there, Greg, you asked me how bad will it get. So this is all fact. You can look at it all. You can judge for yourself. But I want to contrast that with Katrina as an example.
So wait, I'm going to finish one thing before we go to Katrina.
Sure.
You're saying that the U.S. will turn into Argentina.
I'm saying it could, not would. I do believe it will. I mean, the bottom line of this movie was, why did this happen? And it was overspending. Overspending, Greg. This is the bottom line of why it took place.
And heavy debt. And to your point, the debt bomb. Their debt bomb in Argentina exploded, and you had, 40% of the middle class go into poverty. Is that right? Now, you think this is the same type of scenario that will happen in the United States of America?
I do believe it could happen here. Yes, I do.
And then Katrina, it may not be so calm here in the U.S. I mean, you've seen what happened in Ferguson and Baltimore and all this other stuff, and it's not just African Americans. I don't want people to think that. I mean, I think this will be an equal opportunity, chaos throughout America if their banks shut down for days, weeks. EBT cards don't work, credit cards don't work, right? I mean, that's what you're talking about. That's your Katrina example that you're going to use.
Exactly. I mean, I think if you look at it, contrast to this documentary, that there will be areas in the United States that will not be as, let's say, easygoing about this dire situation than it was in Argentina at large. And this is a contrast I want to make. So my idea of how bad will it get is in some places it will be different than other places. In some places, mostly rural, you'll probably have less, violence, if you want to use that word, than you might in the inner cities. On top of that, you're probably not going to see EBT cards not work or ATMs not work, although that's a possibility. And certainly bank closures is a possibility. What I see is more like the model we see in Greece recently and in Argentina in 2001. Which means that you can get your cash. You're just limited to, let's make up a number. It's not the number to focus on. It's the idea. You're allowed to get $250 cash per week out of your ATM. Well, that's wonderful if your mortgage is, $2,000 a month or $1,000 a month. That leaves nothing for food or gasoline or whatever. In this movie, there was a huge barter system. And one of the entrepreneurs in Argentina started printing their own currency. So I'm printing our own currency. And so he did. He put up these units. I forget what they were called. It's in the movie, obviously. And so people went into these huge centers in the different cities in Argentina, and they bartered. So you could get a haircut for, this script and exchange that script for apples, as an example. I don't want to belabor the point, but people adapt. They survive. They work together. And this is what happened in Argentina. And again, I question how much will go on in the United States. I would say certainly that will take place in the United States. I also state that my belief or my opinion is that in some areas it's not going to be so lovey-dovey. It's going to be, where is mine? I deserve it, whatever. And this is a human problem. This is not a race issue. This is this is people in the U.S., regardless of what stripe they are. It's going to affect everybody. And the other thing is, it's top to bottom. I mean, even the ultra-rich certainly may have protected themselves. But, when the country's in disarray, do you think you're going to be, the happy banker walking to your office, walking to HSBC while all these people are in the streets? I don't think so. So will it get to that point in the United States? I don't know for a fact. What I know absolutely is outlined through the fractional reserve chapter in the Silver Manifesto, the bullion banking chapter in the Silver Manifesto, laying the foundation into the debt bomb, is that we are on that trajectory. Nothing has been solved since 2008. The debt problem has only gotten worse, and it's in fewer hands. That's called complex situation. That is a collapse scenario. It has not been solved. They're making the problem worse. So we are headed on that trajectory. And frankly, Greg, I think we're going to see that manifest. Is it going to start this September or not? I really don't know.
Well, it looks like it is starting. I mean, we have these gyrations in the market, and then the Fed threatening to raise interest rates. I mean, on one side of their mouth, last week we had the jobs report that wasn't good. And then you have some people in the Fed saying, maybe we can't raise rates. And other people, Jeffrey Lacker, saying, this is a great time to raise rates. Do you think they're going to raise rates, A? B, if they do raise rates, don't they want to intentionally crash the market?
Well, first, I think they will raise rates. I don't think they'll do it. I think they will probably do it before the end of 2015.
But not in September.
No. But a quarter, it could, I doubt it. A quarter point of raising of rates won't really have a huge effect. I mean, if they raised it, 2%, it would crash the markets. There's little doubt, or 3%. So they certainly couldn't go back to what we consider nominal rates for savers. In other words, 4 or 5% on your savings in the bank. Those rates could not be achieved in today's world because it would absolutely crash the system. Because what it would mean is that the servicing of the debt in other words, making the interest payments on the outstanding debt of 18 trillion or so in the current accounts, not counting the off-budget items or stuff that's delayed out like Social Security and pensions and all that stuff. Just current account could not be taken care of if you had higher interest rates. That's the main reason you have zero interest rate policy, isn't for stimulating the economy. Almost none of this money has gone into Main Street. It's all gone to Wall Street. And the reason isn't about helping stimulate jobs or any of the stuff you hear on the propaganda press. It's all about being able to, for the Treasury to be able to maintain its interest payments to the private corporation of the Federal Reserve. That's what it's all about. It's like making sure that if you have a problem with your credit card, Greg, and you cannot make your interest payments to whomever you owe that debt to, and then making a deal with you and saying, you know what, we're going to reduce your interest rate from 12% on your card to 1% on your card. So that drastically reduces the amount of interest you have to pay on a monthly basis. And that's what this is all about. It's really, and I mean, others have said this, of course, but that's what it is. So will interest rates go up? I think they will, and here's why. It's going to show the world just how tough the Federal Reserve is. That they do what they say, and they're, looking at the big picture globally, and they know what they're doing, and therefore, see how tough we are. We raise it a quarter basis point. Will that cause interest payments to go up that I just outlined? Yes, but a very small amount. It's not like, again, raising interest rates up to say, 3, 4, 5%. That would be devastating, and that is not going to happen.
But the big issue, the debt bomb. The debt bomb is really the center of the universe. The center of the black hole is the debt bomb. Is that right?
Absolutely. There was an article, I wish I saved it. It was back when I lived in a different place. And it talked about the eighth wonder of the world, compound interest. And the problem with compound interest is it goes exponential, which means that there's a point on that parabola, on that hockey stick, where you just cannot service the debt that I just outlined. In other words, just a small amount of money at interest, even very low interest, is so ominous for the burden of servicing that debt, the whole system collapses. That's why compound interest cannot go on ad infinitum. Every time that it's tried, this eighth wonder of the world, it fails. And why does it fail? Because it cannot be sustained. If you go back and look at why, we've gone as far as we have, and I'm one that was in the camp of like, it would happen earlier than it has, and the reason being is it's a Ponzi scheme. And for a Ponzi scheme to work, Greg, as you well know, you have to have more and more suckers at the bottom of the pyramid. And it dawned on me, sorry, I'm, studious, but I don't always get it right at the first glance. It was like, how is this going on beyond here? Because my calculations, my work said, well, we're pretty close to the edge right now. And then I did the one-handed clap. Oh, my goodness, what did I overlook? Well, what I overlooked was that the Anglo-American Empire had brought China into their banking system using their banking practices, and now you've got 1.2 billion people to add to the bottom of the pyramid. So once I realized that, and I realized it fairly early, I go, well, this could go at least another decade, if not longer, because you've got a great mass of people that you can bring into the Ponzi. You've added a great mass of people to it, but we're reaching the limit there. All systems reach a limit. No tree grows to the sky, as a metaphor. And believe me, silver investors should keep that in mind as well, because when we get a paper price that's very high, as long as you can exchange for paper, or better yet, spend your silver for another something of value, I think it could be a time, or would be a time, to say take some profits off the table. But obviously we're not there yet. We're at an inflation-adjusted low in the silver market.
I mean, this is a low. I mean, $14 if you account for inflation is like, what would it equal to 2000 levels?
Greg, we did a study for our Morgan Report members, and we use the true money supply, and I won't bore you with that. You could Google it. But based on the true money supply, and this is a way to really look at it objectively, not, David Morgan's opinion, we are basically at the same price vis-a-vis the true money supplies we were at $5 silver in the 2000s. So believe it or not, if you measure it against how much fiat's floating out there on a per ounce basis, you're buying silver today at the same level versus that metric that you were back in the early 2000s. So this to me means buy, buy, buy.
Silver's cheap.
It is very cheap.
And final question, what would be the mining cost of silver right now? What's the average mining cost of silver? Is it 15, 18, 20? What is it right now?
Well, obviously it varies company to company. We did that.
The overall average.
Yeah. It used to be about 22 an ounce. With the oil price dropping from 100 to the 40s, it's now about 15.
So this is, you're getting silver right at or just below mining cost in the 14s.
That's correct. You're probably buying, in most cases, you're buying it at less than the best producer on the planet can produce it.
And you think that I think you've been pretty spot on picking September as a time for turmoil. Do you think the turmoil increases from here by your read, your analysis, what you're talking about, or does the turmoil smooth out?
Well, it ebb and flow, but the trend is increasing. It'll go in a wave pattern, and it will, unfortunately, in my strong opinion, get worse before it gets better.
David Morgan, he is the co-author of SilverManifesto.com. It's say your co-author's name, Chris Marchese or Chris
Marchese.
Marchese. That's right. We got to get his name in there. He's your co-author, Silver Manifesto. You are David Morgan of Silver-Investor.com. David Morgan, Silver-Investor.com will be a link to the book, a link to your site on the USAWatchdog.com site. For you YouTube folks, go to the USAWatchdog.com link I put up if you need any of those links. David Morgan, thank you for joining us today on USAWatchdog.com.
Totally my pleasure, Greg. Thank you.